What's up, Swing Trader Snacks here. We're going to jump into our watch list for Tuesday, October 4th. And as always, we will start with a little bit of market breadth here. I've got some grayed out zones here that are, I think, important at this time. This is the line of the sand that we talked about yesterday for shorts, really. And we talked about a scenario. Obviously, we like to build scenarios, right? Not guess. I need one of these two things to play out for me to take any new money positions. And, so knowing this is the line in the sand here for shorts off of Friday's sell-off, we were looking to either get over it, okay, and go long in a move like that, or if we popped up into it and rolled, then we would have to consider some puts on a move like that. So let's see what happened yesterday. And we've got these zones here where this yellow line is top of range and bottom is Friday's lows. And this lighter gray zone right here was the weekend range. So Friday futures open essentially until Monday morning's New York open. So that was this range right here, and we were pretty much ranging in it throughout the day, popped out but pulled back in and closed at the top of it, which was not overly concerning. It was actually, I think, a very constructive price action. And then if we look at what we've done here into extended hours, we've gapped down below this range that we stated was quite important. Guys, not what we wanted to see, okay? And it is also why we weren't going to rush into any positions. Let's look at the futures action. Maybe tells a little bit better of a story. We could use that same line here on Q. Oh, we've already got it there. Okay, so yeah, same line here. And as you can see, we were thinking that I wanted to lean long, right? I wanted it to be overreaction on Friday to a tweet, and then we get right back onto trend. We tried to put in the first leg of that here yesterday, but then we failed at a very important area, and we're rolling over. So guys, I am a little bit concerned with current price action. So we'll just have to see how it goes. This is pretty nasty. But today we have multiple major banks reporting, and I think it could be a catalyst either way. Okay, if these things miss earnings, look, I just don't really love to predict too hard, but if these things miss earnings, I can see a scenario where we see some downside. Something I didn't mention in yesterday's watch list is this, guys, this was not max pain. What happened on Friday was not max pain. It's not even close. Okay, we need financials, banks, to be a participant in a trend higher and a move higher in this current rally that we're in. Let's go back to just the daily here. We've kind of looked at intraday price action enough, in my opinion. But look, if we're going to keep pushing, then we need financials to be a part of this. And if you look at the sector ETF, not a good look at all here. Okay, so look, we need this reversing quite quickly. Structurally, are we okay? Yeah, sure. Okay, but we need to move back up into this range and start pushing towards the top end of it if we're going to have banks participating in an upward rally. So yeah, look, today is important in that sense. We've got JP Morgan, Goldman Sachs, Wells Fargo, some others, right? A handful of banks reporting, and I love that it is pre-market. So we're going to kind of set the tone here for, in my opinion, where we go next. And I think it's going to be based off of that. And there's a couple semiconductors reporting tomorrow. I believe it is SMCI. A few big semiconductors, we're going to want to hear. We're going to want to see their numbers, right? Obviously, continued sustained growth, maybe matching some of the speculation. These pretty outlandish claims coming from the site. Look, we need growth, okay? And we need stability out of the banking sector as well. We need growth there as well to support a push higher into year end, in my opinion. So look, that's kind of the call here today is, I'm glad we didn't do any positioning. I mean, in my opinion, you didn't have any reason to take a new position, any new money yesterday. We're in this range, right? We're in the range of where the bears are in control. We stayed under it, right? And look, we stayed above Friday's low. I took a small starter on something I plan to hold very long term. Path is what I'm looking at here. Just real quick, I might as well show you guys why I like this guy. So we've got a recent IPO coming out of a base pattern on volume. It's something I do like to position into. And I looked into this company quite a bit. Anyways, look at this volume here. I'm acquiring shares. I plan to hold this long term. Okay, and I got like an 8th size position yesterday. Nothing significant at all. I will average down. I would love to actually average up. But yeah, I just wanted a bit of exposure to kick things off. Got in at 17. All right. My point, guys, let's see what the banks do. This is some pretty nasty price action coming out of crypto as well. Let's pull up the 5-minute. Not a great look here in crypto as well, right? They've rolled this thing over. Look, we need to see a bounce, okay? But yeah, I think the banks are our shot here, okay? If the banks report good earnings here in a couple of hours, then I think we go higher. I do. So maybe this is just all pre-market overnight mess that none of us even need to worry about. But we do need to pay attention, guys. RSP, when I went to sleep, I'm in Thailand, so I don't typically get to watch the entire session. I actually find that advantageous. But look, hey, RSP, I'd like to see it back over the 50 and start to push back towards top of range here. Overall constructive day along with IWM. Actually quite constructive there on IWM, but we are gapping down on pretty much everything, okay? So look, we need clarity. And again, one last time, I think the bank reporting, to just keep an eye on XLF today, okay? Did we get back up into range, right? Or if we roll over, that is very concerning. And I'm probably going to be open to some shorts or puts, whether it be on the SPY today or individual companies. I've got this little devil here with a list of a handful of companies a couple doggies I'm willing to take out, clean them off a little bit, right? Just some dirty boys, just some dirty dogs, okay? Anyways, look, I do have a list here of some triple R triggers. We'll take a look at that if we're strong. JP Morgan is one. I think if we do get a report of good earnings, it's probably going to gap up on us. I'm not sure we'll get the trigger on it. But in the sector, things that we might actually get a trigger for that probably won't gap up off of JP's earnings. I like SOFI. This is one, I didn't get into this, so let's get this out of the way. This is one that we have been looking at, guys, in Bootcamp. I like it over yesterday's highs if we can get that, right? And we have good earnings out of the rest of the banks, right? And suggesting a push higher in the sector and likely the market as well. I like SOFI over yesterday's highs, so we'll go ahead and mark that out. We don't need anything too dramatic, but we'll be looking at this tomorrow, today, in a few hours. We're going to be looking at this price level, and Dave is another one. This guy can get pretty squeezy. Let's get the 5-minute off. I don't like to look at that when I'm going through my list. Still holding structure. Haven't put in a lower low yet, depending on which low you're looking at, but none of them have we put a lower low. So this is still constructive. I would look at clearing this range on good numbers coming out of the banks. If we do so, looks like, what is that, over the 215 area? I think this guy could squeeze a bit. So I like those two banks quite a bit. And then we've got CRDO we've been looking at for a while. Had some constructive price action yesterday. We were gapping down. I still want this range cleared. It's the range we've been looking at for nearly a week now. So yeah, I want to clear that range, and if we can do so, if we have a push and look to be getting legs out of the market. One last thing I want to say is, I may still require that we get up over this yellow line in the market. I think if we get good numbers out of the banks and we rip going into it, I think that's doable today. I think that the pre-market will reverse, right? I don't know. They'll probably report around 7-ish, 8 a.m. I think certainly by 8 a.m. the numbers will be out for those 5 banks. We ought to know. We ought to get a tone. And then I think I still do want to clear, like this scenario up here, right? I want to get above that line in the sand, that neckline threshold above it. Maybe a slight little pullback. Maybe even not, though. Of course, just strength is strength. But if we get a slight pullback and a hold of it, that's beauty, okay, and I would buy that. But guys, if we're gonna roll, we just gotta see. We gotta see. This is predicated, this is dependent, I would say, more so on the banks today. Net looks good. Same stuff we've been talking about for a week here, right? We're going sideways at all-time highs. Long-term cup and handle. This has a look to it, guys, and I'd like to get into it if we can. Back for all-time highs, or this line is still significant enough for me, okay? We tried to break out of it on Friday and rolled, right? So I think back over this line right here is sort of the line in the sand there on one that is loading up. So I'd like to get into there. Dash, same look. Okay, exact same look. Cup and handling at highs, just above it. Just a moment. corporate accounting, this is just above it. We kind of already did the cup and handle, right? So look, holding up on the move, I like it. Back over the 9, it's got to look for me, right? And then I think that's it. HWM, aerospace, hot sector. Also, guys, I mean, rare earths, like buy triple R setups on rare earths for the next year. Okay, that stuff's hot, but I'm already in it. I got a bunch of lithium stuff last week, and wow, I'm glad that I got starters in it. And looks like I'll be averaging up, which again I do prefer to do as opposed to averaging down. What am I doing here? HWM, aerospace, hot sector. So you get triple R setup for guys. Those of you who do not know, I look for a retracement, reaction at around the level, and a remount. Retracement, reaction around the level, and a remount, and then we're getting a possible one right here. Here was one back here, and we're getting another one maybe over the 9. Not my favorite, but it's there. It's a hot sector, more so why I put it on there. And we did get a reaction off of the 50, but we're pushing back down towards it. But, over yesterday, Monday's high has a look to it. And just to clarify for anyone who it is their first time here, the triple R is my bread and butter. I trade the leaders in a trend backed by growing fundamentals, showing the ability to respect structure. The entire thesis behind this is that this is a leader. The one thing we know Wall Street must do is position into leaders. And they don't do it just once, right? They do this over months, quarters, years, okay? They'll position into these things, and a lot of times it's why when you see them retrace, when they go on sale, they'll step in, defend a level, get it back onto trend, push it higher. It's how it works, right? It's market structure, and when you have a leader, okay, with growing fundamentals, respecting structure, higher highs, higher lows, okay? Or if we're in a bear market, the opposite, okay? Lower highs, lower lows, same kind of idea, right? Anyways, look, that's what we're looking for, and you get a retracement, reaction around the level, and remount of the short term. Okay, retracement, reaction at around the level, remount short term. Retracement, reaction at around the level, remount of the short term is trigger force triple R, and that is my bread and butter model that hits at over 70% in a trending clean follow through type market, well over 80%, and we set a minimum of 2R, and I use options for leverage because I have the data that supports and validates my edge, allows me to use leverage. Guys, do not use leverage if you do not have a proven data-backed edge, okay? I'm talking about dozens at the minimum of trades, of executions, okay? And I'm not talking about paper trading, okay? Your money out there on the line. Are you outperforming the market? That's plain and simple. Especially here in 2025, okay? Are you outperforming in the market? And if the answer is not a resounding yes, okay, consistently, you should not be using leverage, okay? Just use shares, okay? Bring down your risk until you get your feet under you, guys. What is the rush, okay? This is an edge that you can apply for the rest of your life. If you learn to outperform the market, freedom. All right, so there is no rush, guys. If you do not have an edge, protect yourself, okay? As you build it, stop using leverage, right? It looks like some people are in trouble again in the crypto space. By applying leverage, right? It is the source of manipulation, okay? The manipulation is that they're preying on your emotions by allowing you to oversize and use leverage. I don't want to rant on this, but in my opinion, that is the manipulation, okay? It is leverage for traders who should not be using it. It's really just that simple, right? They make you think you got some shortcut to success, but guys, say it out loud, okay? If you cannot outperform the market, why would you apply leverage to amplify the fact that you can't outperform the market, guys? You're literally going to lose your money faster. All right, so chill out. Consider joining me in Bootcamp, where I lean over your shoulder for 60 days and give you an edge you can leverage for the rest of your life. I teach you all 6 of my models, 5 of which are continuation patterns on the leaders. The 6th is a narrative trade. My latest was lithium, and that's already going quite well. But guys, look, consider joining me. I also, on top of the models, I teach you proper risk management, okay? You submit a risk profile to me day 2 of Bootcamp, right? We revisit it frequently, especially as you begin to take trades, even paper trades. We build your structure around your risk profile, your risk tolerance. Guys, look, risk management is king, period, right? So it's a major part of what I teach you is how to actually properly manage risk so that you're not just making money, okay, but you're keeping it and compounding it over time. Consider joining me in Bootcamp. I would love to have you. I can help you. And if you're struggling, frankly, I'm just going to start saying this because it's the freaking truth. If you're struggling in 2025, you need some help, okay? Because this has been a very, very opportunistic market coming off of April lows. So you need to consider a coach, whether it be myself or someone else. This has been an opportunistic market and you should be making money. All right, guys, that's it. Look, we got to look and see what the banks do. All right, if the banks can get us back onto trend, if we can get some good earnings coming out of that, I think we're going to be okay. If they're weak earnings, I'm going to be a little bit concerned and possibly taking some short-term puts. I'm not saying we're rolling into the pop of a bubble, right? But, we may get some two-sided trading here where it was advantageous to short a couple things that are triggering. All right, so that's it. Stay safe, manage your risk. Let's go make some money. I'll see you soon.